What's up, everyone? It's Kadi with MoneyVest. So, because of daylight savings, I thought the markets were going to close an hour earlier here in Dubai, but instead they're now going to close an hour later, which has obviously screwed up my entire sleep schedule to make matters worse. It's now going to close at 1 a.m. here. And so I'm going to most likely record these market close videos while the markets are trading and they're almost going to close. So they won't exactly be super late. But if I do that, I'll be in bed like at 3 in the morning, and I don't want to do that. So hope you guys enjoyed this video and find it helpful. I really appreciate your guys' support. Make sure that you drop a like and don't forget to subscribe to the channel. I do turn 27 today. Today is the big day. I do turn 27. November 7th is the birthday, the big day. So thank you so much in advance for all the comments and the best wishes. In this video, I'm going to break down the whole sort of timeline and the process of the money market funds, which are hitting a new record high, almost at $6 trillion. We're trading at 4.5 times the median average of over 70 plus years. I'm going to sort of break down what I believe is going to transpire over the next few quarters as yields continue to start, coming down. So hope you guys enjoy this video and find it helpful. Again, make sure that you drop a like, subscribe to the channel. Links to our Discord, Patreon is going to be down below. I did open up a few more spots if you want to join. And of course, support the channel, support my work, and be a part of our MoneyVest community. You also do get access to a lot of the spreadsheets that we are building. So basically, I sent out this update in the Discord saying that everything, and I mean everything, will be consolidated into one big MoneyVest spreadsheet, and through that one spreadsheet you will have access to multiple tabs on the top, right? So that's going to be related to the S&P 500 valuation, individual stocks and their intrinsic value, so what my fair values are for these individual stocks. And I'm also going to include the support and resistance levels, so technical levels for these companies, and the volatility cheat sheets as well. So we're going to track both the VIX and the VXN, and NASDAQ and S&P 500 stocks trading above or below certain moving averages, and also inflation and economic indicators that I'm working on now, and bonds and yield curves and spreads. That's also going to be included. So it's going to be one tab and one spreadsheet which is going to have access to everything. So this is, again, that I've been talking about. So NASDAQ spreadsheet here, S&P 500 valuation, total assets and money market funds, volatility summary. So everything's going to be part of that spreadsheet, including the intrinsic values and the support resistance levels. So link's going to be down below. We'll love to have you on board for that. So when it comes to liquidity, as we have already looked at, so if you come over to the total money market funds, you'll notice that this chart basically tells us that right now we're at a record high at 5.9 trillion, right, as of the second quarter 2023. So pretty substantial number. Again, we're at 4.5 times the median, and the quarter over quarter change, we've seen almost a 4% increase in from previous quarter for this number. The median read has been 1.3 trillion. And the reason for such a lower number is because rates were never so high. Right, the fact that rates are so high, there's a lot of liquidity in money market funds. These are short-term, almost equivalent to cash because they're liquid and because there's high savings in being invested in money market funds because of the rates are being higher. That's why, we're seeing such a high number for this at the moment. Now, this is where I believe in the process of how it's going to happen. So when yields start rolling over, right, and treasury yields start to come down, that's when I think a lot of investors are going to realize that, okay, the top is in, okay? And that's when they start to flood back into treasuries because they want to lock in those rates. 5 years, 10 years, 20 year, 30 year, at 4.5%, close to 5%. They want to lock those rates in. And as a result, they can start to see, liquidity flooding back into the treasury market. Now, after the treasuries drop below the 3% threshold, 3% is important. And the reason why 3% is so important is because right now inflation is at almost 3%. So treasuries are giving you a return that's more than inflation, right? So on a real inflation adjusted basis, treasuries are a huge win because the rates are positive. Real rates are positive right now. And the moment they drop below 3%, real adjusted for inflation rates are going to be negative, right? So anything sub 3% nominal yields means real yields, once adjusted for inflation, will be negative, and that will push equity risk premiums back higher. What does that mean? That simply means that investors right now, they don't have any incentive to be investing in equities, right? Because the treasury yield is about the same as the earnings yield on the S&P 500. But if treasury yields start dropping, then that will make stocks a little bit more attractive relative to bonds, right? In other words, the equity risk premium, the premium that you have to, the premium that you generate by taking on more risk expands, gets better, right? Gets more attractive. And that's why sub 3% is such an important threshold for yields to make equities look a little bit more attractive. And that's when, in the second step of the process, is when I see liquidity flooding into the equity markets after it's already gone into the bond market. And of course, people have taken advantage of those treasury yields. So that's where we are, i.e. investors will be compensated well to take risk for taking on equities or investing in equities as well. So that's kind of like the timeline of the process. And right now, of course, you'll notice that, the 10-year treasuries are pushing higher once again. So we are higher so far on the day, 1.7%, so back over 4.6.5%. So again, we're watching that 4.79 to 4.8% level for the treasuries, right? If you get up to that level, get rejected, come back down, that's great. If you push higher, get breakout above this level, then that's obviously not going to be great news, and that's going to put us back into this sort of cycle of this downtrend of this lower high and this lower low as well. So stock market correction is over after broad surge amid an epic market rally. So this right here was last week. All 11 sectors in the S&P 500 were green. So performance was broad-based, and there was massive participation across the board in all sectors of the market, pushing higher. So the plunge in the bond yield boosted the valuation multiples of technology stocks, as well as the more traditional interest rate sensitive ones. That was Eddie Ardini. And real estate was the S&P 500's best performing sector last week, ripping 8.5%, while financials and consumer discretionary had the biggest gains next. And I did ended up adding a Realty Income Corporation, ticker symbol O. So again, if you want to get access to the alerts as well, definitely do check out the links down below. And last week, Realty Income Corp was up a little bit over 3.7%, but that doesn't do justice because from low 50s, from mid 40s, it actually ended up rallying over 13%. So very, very strong gain, over the week from an intraday basis. Now, let's move on to investors poured more than $5 billion into active bond ETFs in October as well. So the active fixed income flows in October were mainly driven by ultra short duration strategies that seek to deliver income and stability. So again, there's some money flowing into equities, in bond market already. So we're starting to see some more momentum into that particular part of the market. And I think that's only going to accelerate as yields continue to be very, very elevated and yielding over 5%. That's what investors are sorting after at the moment. 43% of the month's inflows went into ultra short bond funds, according to State Street. And the funds which hold securities that mature in less than a year can help protect against interest rate risk. About 25% went into intermediate core plus bond funds as well. Now, this right here is the FedWatch tool, right? And we are, once again, repriced for rate cuts, 4 rate cuts priced in for 2024. So this right here is really where we are with respect to rate cuts. So 3 more pauses expected by the Federal Reserve, and then 4 rate cuts priced in for 2024. Now, we know the market is in a little bit of a discrepancy against the Federal Reserve. The Federal Reserve's penciled in, potentially 1 more rate hike and fewer rate cuts in 24, only 2, whereas the market's pricing in no more rate hikes and 4 rate cuts. So now the discrepancy has only gotten worse in the last 48 hours, or in fact, in the last week, as soon as we heard from Jerome Powell in the Fed meeting last week. And even though he sounded tough, even though there was a hawkish tone to the overall press conference, the market did not buy Jerome Powell's bluff, and he is, he can't help it, but of course push down the yields, and that resulted in rate cuts expectations increasing. Now, on the day, we did have a little bit of a momentum on technology. So Eli Lilly pushing higher because there was scientific research executive kind of mentioning, I forgot what it was, something related to a drug that's showing very good signs of, there was a catalyst that I forgot what it was. I was reading about this earlier today, but again, I've been reading so many things that I completely forgot about what they actually mentioned. Let me just quickly see if I can find it. So this is 3 days ago. Let's take a look if there's any news over here. No, there was something. I read it earlier, but I can't remember it. Anyway, so Eli Lilly pushing up over 5%. Very, very strong move to the upside. We've got NVIDIA, Microsoft, Apple all pushing higher very, very nicely. We got Amazon pushing up over 60 basis points. And, of course, Tesla right now basically flat at the moment as well. So moving forward, Google, Meta also very flat. So there are some parts of the market like real estate, energy, oil and gas. We had technology, software application, financials, all of them somewhat trailing behind a little bit here on the day. But other sectors like Novo Nordisk, biotech sector, Vertex Pharmaceutical, and Eli Lilly all pushing higher. And in the last 1 week, of course, we've seen all 11 sectors pushing up as well. On the day, we've got kind of like a mixed market where we do have healthcare, consumer defensives, And of course, technology and communication services pushing higher, but real estate, financial, energy, and industrials selling off. And ethanol prices, orange juice for the win. So we are pushing up here at the moment. And then, of course, we do have palladium, volatility, platinum, and natural gas rolling over at the moment as well. All right, everyone. So finally found the catalysts. It's so frustrating. It was like hidden underneath so many different articles, but I remember seeing something for this. But Eli Lilly, chief scientific officer, extremely optimistic that major new Alzheimer's breakthrough is coming. This was the catalyst that led to this significant massive rally that we saw in sort of Eli Lilly, and of course some of the other biotech sector stocks as well, like Novo Nordisk, Vertex Pharmaceutical, all of them pushing higher. But anyway, now moving forward to the entire market update here. So coming over to the S&P 500, and what we'll notice is that obviously we are, once again, slowing down a little bit on this momentum, right? And this was not a surprise. I mentioned that this was going to be a big technical battle between the bulls and the bears. And guess where the bears stepped in? Guess what happened with the market here? Obviously, a little bit of a doji candle. So lots of indecision, lots of back and forth. And we pretty much closing in flat on the day, about 0.06%, and right in the middle of the day's range tells me everything I need to know about the momentum going into this week here for the market. So doji candle up to that resistance and exactly pinpointing at that lower high at 4,400 really tells us that the price action is now starting to really fade, right? There's not a lot of momentum as we saw last week, like 4 consecutive days of very strong green rallies, and we kind of came up to a halt because we are coming up to that lower high. Not a surprise. It's exactly what we discussed in our previous market updates. This right here is the NASDAQ, the lower high and the lower lows. So again, this is the downtrending channel within which the NASDAQ's been trading. And of course, we are coming up to this lower high for the NASDAQ, and of course coming up to that resistance at around 13,600 for the moment, and again a doji candle for the NASDAQ as well. So closing right in the middle of the day's range and up only 0.18%. So once again, still in the context of a downtrend, coming up to a resistance, coming up to a lower high, and the momentum is starting to fade just a little bit. Starting with Apple. Apple here continues to break through. So we are starting to break out a little bit from this downtrending channel, but the real test is going to be at closer to $180. So this right here is going to be that level to watch for Apple, whether we see a breakout or not. Obviously, is going to dictate the rest of the week's direction moving forward, and support level is going to stay put at 172, kind of in line with that 200 simple moving average for Apple. Amazon also with a decent green day, so pushing up. RSI MACD also getting a little bit more on the overbought side. Massive amount of support sitting right over here at 135, and the next target and that resistance is going to stay put all the way up to $146 per share for Amazon moving forward. Talking about Tesla here, Tesla also just consolidating sideways, so not really going anywhere. You'll notice that a lot of stocks are actually flat. There's not a lot of momentum here, right? Because the markets are coming up to a resistance. A lot of individual stocks are also coming up to a resistance. Like Apple is coming up to a resistance. S&P, NASDAQ also kind of hitting the upper end of their resistance here. Tesla, not quite, but support level is going to stay roughly around 214, 215, and the resistance obviously as much as $240 per share for Tesla moving forward. Talking about NVIDIA here, NVIDIA also coming up to its resistance right now, sitting roughly at around 474, 475. So this right here is going to be that resistance, that horizontal line to really be paying attention to for NVIDIA moving forward. And this right here has really been the overall consolidation pattern that we have seen for NVIDIA, with a resistance sitting right over there and a support level, of course, right over here in between that range for NVIDIA moving forward. Talking about advanced micro devices, and AMD also with a very nice move to the upside. RSI MACD a little bit more on the overbought side, but once again, coming up to that resistance, as we have talked about, 112 is still going to be that level of resistance right here, and a massive amount of support sitting right there, roughly around $100 to as low as $94 per share for advanced micro devices. So that right there is really going to be a lot of consolidation for advanced micro devices, and that's going to be that resistance. Support level is going to stay put at close to $100. Talking next about PayPal, and PayPal here not really moving all that much. Again, you can see that we are exactly getting rejected at that resistance again. So this right here is the level that we talked about, and wow, 56.72 the high for the day, and 56.75 is our resistance. Like, talk about to the T. Absolutely 3 cents off from that resistance. Got rejected, sold right back down, 54.65. We don't have any gaps to fill, but support level is going to stay with just a sub $51 per share for PayPal. Talking about Visa, and Visa also with a very nice momentum back up. However, just consolidating sideways, so not a lot of volume, not a lot of price action. So it's really been quite a boring day. I'm not gonna lie. I mean, there's not a lot of price action on the day at all for a lot of these companies. They're just moving sideways and flat. And next resistance is going to be at 250 for Visa. So this right here is going to be that level to watch, with the support level obviously sitting roughly around $229 per share. Next one on the list is going to be Meta Platforms, and Meta here, again, coming up to that resistance, as we have discussed, a lot of consolidation in this range. So a little bit of that horizontal pattern for Meta Platforms, and resistance is going to be all the way up to here, 315, 325, so that $10 range. And support level is going to stay put down to $275 per share for Meta Platforms. Netflix, next resistance all the way up here, 452, with a massive amount of support sitting right here, close to 396, close to $400, all the way down to as low as $349, $350 per share. And of course, we have seen a lot of consolidation sideways for Netflix, with of course a resistance back up to that level, sitting roughly around $452 for Netflix. Google, on the other hand, resistance all the way up here at 139 to 144. So that's pretty much the range within which it's been trading for the most part. And of course, we're coming up to this gap fill, which is very good. So up over 84 basis points. But this right here, the gap is going to get smaller and smaller. Support level is going to stay put down to $126 per share for Google. Microsoft, on the other hand, very, very nice rally. So coming up to this higher high, up over 1%. So basically going back up to these all-time highs at the moment. And next resistance is going to be all the way up to $366 for Microsoft. So this right here is going to be that level to watch, with the support level staying put at roughly around $340 per share, all the way down to $310 for Microsoft. And finally, we do have Costco over here. And Costco also with a very nice move to the upside, up over 1.5%, and coming up to that resistance right now. So again, this is the level to pay attention to, sitting roughly at $569, $570 for Costco, and support level is going to stay put roughly around here, $531 per share. And finally, we got Enphase Energy, which is really consolidating sideways, down about 3%, so not really moving anywhere, just a little bit over $78, with a resistance all the way up to 92. And of course, we got lots of resistance levels to break out of for Enphase before we can see any type of reversal in the overall trend. So the bottom line is the markets are coming up to a big technical resistance here. This is really where the battle begins for the market, with S&P and the NASDAQ coming up to their lower highs respectively. And it's going to be sort of like for us to wait and see whether the markets can break out of that resistance and break and change that direction to a higher high, higher low pattern, or continue to get rejected and keep trading in this downtrending channel. So hope you guys enjoyed this video and a complete update on the markets. Make sure that you drop a like. Don't forget to subscribe to the channel. Links to our Discord and Patreon is going to be down below. We'd love to have you on board. And again, I did open up a few more spots to get access to all of our spreadsheets, intrinsic value levels, fair values, volatility spreadsheets, S&P 500 valuations, buy and sell alerts, options alerts, members only private videos. Everything's going to be included with the links down below. So always happy investing. I'll see you all in the next video.